Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, July the 10th. My name is Eric Wilkinson. Yes, you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data across the pond in the form of industrial production out of France. Came in at 2.1%, expected to be 0.3%, so much better than expected there. Nice beat and a revision to last month's number, up by 0.1%. So not really making up a whole lot of ground or making that headline number looking that much better, but it does. And it's hard to beat that big beat on the headline number, 2.1 versus 0.3. We've been seeing a lot. The reason why I'm stuck on that number, it's not one of the major numbers to look at, but it is completely outside of what we've been seeing coming out of France and Germany for that matter. We've been seeing some recessionary indications out of there. So this industrial production number is a silver lining for some of those other economic data points that we've seen coming out of France. Italy's industrial production, it's a minor aspect of the European region, came in at 0.9%, beating the 0.1%, but last month's number was revised down from negative 0.7 to negative 0.8, but a 0.1% revision is not going to hurt that headline number that much. Then the greater Great Britain area came in for their GDP at 0.3%, expected to be 0.3%. Manufacturing production came in at 1.4%, expected to be 2.2%, and last month's number was revised down from negative 3.9% to negative 4.2%. So even a more negative revision to that headline number there. Construction output came in line with expectations out of Great Britain. And then we moved back over here to the United States. We got Powell's testifying again today. We also have the we have a couple of FOMC members speaking. We have Ballard and a couple other ones speaking. I can't remember who else. And then out of the U.S. for the economic data, we got wholesale inventories coming in line with expectations at 0.4%. Oh, Canada did not change their interest rate overnight at all. It's still at 1.75. And then again, back here in the United States, we got crude oil inventories. Another big drawdown, 9.5 million barrels, expected to be a drawdown of almost 2 million barrels. So a major drawdown over expected. That means supply coming down, demand going higher, prices should rise. That's why we're getting this move towards that $60 a barrel area. I'm still in the camp that crude oil, despite the fact we're seeing some demand here, the economy is still at a brink, like just on the precipice or the cusp of going into recession, because Europe's already starting to show those signs. We don't want to see that here in the United States. And one of those things that can really drive that recessionary aspect of an economy is something like oil. So I'm a little worried about oil causing us to slow down a little bit, which is why, I want to see it roll over. Not technical or anything like that. I just want to see it roll over to the downside to help with the overall economy. It's not a technical trade or anything like that. It looks to me like oil wants to go higher here, all right? That is breaking through all these Fibonacci's we've been talking about. We've busted through that right now and are starting to move higher. So we've talked about this before, where we're getting the two Fibonacci's right here lining up together. It lines up with $59 a barrel and $58 a barrel. You can see yesterday we peeled through that, and I also even talked about these two simple moving averages right here. We got the 200-day right there and the 50-day. Those are crossing back over to the downside. Usually that's more of a bearish indication. A move higher will pull that back over again, where they're crossing and it looks like more of a bullish move. We're getting that to the upside, excuse me, and we peeled through both these resistance. The next line of resistance is $63 there a barrel. So that looks like maybe where we're going to head. Since we've gotten above all of these resistances, these are going to act as support now, both of these. So that's going to be a major area that is going to find some support in crude oil. So that whole rolling over to the mid and lower 50s is probably not going to happen anytime soon, especially because we've been seeing these drawdowns happen pretty consistently here in the summer. So people must be getting out and traveling and spending some money, which is good for the overall economy, right? As long as we're starting to do that. And then we move over to the bonds. I don't know what happened to my gold chart. Let's pull up the gold chart here. Gold's moving higher yesterday, getting above that $1,400 a troy ounce area. We were talking about that as a major psychological line in the sand. Really kind of lines up a little bit lower than that. This a support in here that isn't showing up on any Fibonacci or anything else. I'm still looking for this to kind of get covered in, filled in with some price. We can see there was never a trade through there. That is something that the markets technically want to cover before we get any major move to the upside. That being said, it feels like this market isn't as concerned about covering that gap. The bulls are coming out in force anytime we come down in and around peeling into that 1300 handle. That's where we start to see a lot of money coming in there to support this market. It's not really lining up necessarily with 1400 exactly, but as soon as they see that 1400 disappear, that's when we're starting to see a lot of buying pressure come into this market. So gold not looking to roll over either anytime soon anyway. All right, the bonds, they are finding that this 154 that we've been talking about, 154.22, which we're kind of trading very close to that right now. That is lining up with the 61 Fibonacci. That's the 154.22 I was talking about. So you can see yesterday when we come down and test that 61 Fibonacci extension that we are finding some support around there. I don't think the Fed is going to lower interest rates. We're seeing this demand in crude oil, which is giving indications as to the economy is doing rather well. If there's that demand coming in for crude oil, one has to assume that it is due to gasoline and distillates, some of the byproducts of that crude oil, right? That's the demand we're starting to see coming in. And the market is trying to hold this 154.22 area. So a settlement above this Fibonacci is going to look like they found a bottom here because of this doji right here. We're finding that at the bottom of a move where we're getting a doji like that. That usually is an indication that the market is looking to rebound back up to the upside. So we're getting that right now. If we start settling below 154.22, that isn't going to look as strong as a settlement above there, all right? So look for that settlement today towards the close. Like I said, we've got a bunch of members speaking today. I think that they're going to be pulling out that 50 rate cut in July that people have been talking about. That's not going to happen anytime in July, I don't think. All right, we're still in the teens with VIX coming off by almost a point today, 1319, and that's because we're seeing the equities move higher. Dow Jones Industrial Average up 88 points. All of the markets printed their historical highs in the day session. Now, we've been talking about that. That is a major coup for the day session. But what does that mean going forward? To me, that means that now that they printed that, we might be able to follow through with what I was talking about in a bit more of a correction happening now that we printed that. And we're starting to see these dojis look like this. Again, that is a topping pattern, right? If we get confirmation, anytime we've got a doji that kind of looks like this at the top of a move, if you get a confirmation to the downside, you know, obviously that is an indication the market wants to roll over. We haven't gotten any confirmation, but the way that this one little doji looks right there, that little area on this setup looks very similar to what we saw over here, right? That is a very similar chart setup when we see those happen at a top of a move. We see it over here as well, maybe even right there you could call it. Another one. So that's what I'm talking about. Again here, that was the first sign of the weakness before we started getting that bit of a correction. Again, happening at the bottom of a move, that means it's going to move to the upside, right? That's what we got there. So looking for this little doji is a setup bar we need to look for the confirmation before we get into anything. And I'm going, like I've said, for about a month, I've been very patient. I'm waiting for a definite confirmation. All right, we've got the NASDAQ right here. You can see this is with the overnight session. Let's take a look at what it looks like when we take out that overnight session. We'll just say show extended hours trading. We take that off. You can see we kind of gapped up to the upside. A settlement towards the upper end of today's range, looking very bullish, but we settle back down to where we kind of open. That is not going to look too good. It's going to look more like a shooting star. And a shooting star is when you get your chart patterns setting up. Let's just say we've got, you know, a green candle, green candle, green candle, and then all of a sudden it doesn't matter what color this candle is up here, so I'll just make it white because it could be red or green. But you get something that kind of looks like that, where there is a bit of a gap here to the upside. The market's just gapped higher, creates this shooting star. That is usually an indication of a top, okay? So that could very well be what we're starting to look at here in the NASDAQ. Doesn't look like that, obviously, when we have the day session thrown in there, or sorry, with the overnight session thrown in there. It doesn't look the same as it did before. So when we show extended hours trading, so when we do that, that looks very bullish. But when we take out the overnight session, it starts to look a little bit different. So I'm more inclined to believe the day session trade than I am the overnight session. Not really getting that set up here as much as we saw it over in the NASDAQ, but we can see that if I pull that out as well, it's going to look somewhat similar to that. You pull out all the overnight sessions. It's a little bit of a shooting star action going on. We did print all the highs in the day session, like I said, for the NASDAQ, the Dow, and the mini S&Ps. That's something I told you guys the market wanted to really have printed during the day session as a high and a low to make it a real number. Now we've gotten that. That being said, we're going to keep an eye out. We could continue higher here with the markets. I think the economy is doing okay. And there is no real reason to cut rates. Not seeing inflation or anything like that. So it's going to be a real touch and go here for the next couple of days. Having said that, I did add a trade because I'm basically sick of not trading. And I'll talk about that here in a second. Here's the mini S&Ps. You can see overnight inventory got short, blasted those guys out right on the open of the day session. Just unabated rally to the upside. Now we're starting to see some profit taking going on. The key is what happens towards the end of today's trading session, how this sets up the technical candles and stuff like that going forward. So keep your eyes out for that as well. Then we can take a look at the trades that I've done. The only trade that I've done is added Target as a bearish trade to the downside. Don't tell my boy Jeff Mackey I'm doing this. He's a Target lover. As a matter of fact, I think his dad was one of the kingpins of Target at one point in time in his life. But with Target, I went into the September, and it is going to encompass the earnings right here because I'm going out, past. Remember when we're talking about doing buying strategies, we look for greater than 35 days to expiration. All right. We got real low. Vol is real low. Implied volatility percent is super low for Target. It's in the teens, if not lower. So that is the opportunity to go in and buy premium selling strategy or premium strategies, premium option strategies in something like this. When we have low implied volatility, I expect vol to start increasing down here, going into that binary event of earnings. So that should cause volatility to increase. I'm in this month here, so that's where we're looking for. Like I said, I went into the September and I did I bought the 85 puts, bought the September 85 puts in there for, it was a little expensive, $3.55. $3.55 on that. If I get a correction coming back down to at least where this support is here, lines up with $84 a barrel, I'll be happy. Or $85 for the stock, I'll be happy on that. So looking for this market, hopefully we'll break this support area and come down and test this. That's what I'm looking for there. $85 will still make it a nice little win if I start seeing that trade happen, but I'm just looking for a little bit of correction. This looks pretty bearish. Yes, we might stall out there, but I think we'll peel down a little bit lower to maybe this support area right in here, which lines up with $84 a barrel. That's what or $84 for target. All right, so looking for that little bit of a correction happening here pretty soon. And that's about it. I might be covering my GDXJ because we've got like that gold move higher right now. I'm kind of expecting gold to start roll over, especially if the equities start moving higher. Not seeing that right now as Bitcoin is like really rallying. I think that's really drawing gold up a little bit as well. All right, so tomorrow's webinar is going to be a really good one. We're going to be doing it on the Iron Condor, so check that one out. That's a really good webinar, especially for anybody that has a lower risk tolerance, wants to get into options trading, doesn't really have a whole lot of technical assumptions. You know, basically it is a market neutral assumption for something that wants to trade sideways like this. We are going to talk about what kind of volatility we need. What is this stock? Is that stock a stock that we can trade options in? Okay, so I'm going to go through all those rules to figure out how to come up with a strategy for your market assumption. In this case, it's going to be a market neutral assumption. So find out how we do that in that webinar. Go to ProTraderStrategies.com. Also, give us a thumbs up or a like at our Facebook page at Pro Trader Strategies, because we are putting out all kinds of content on there to help you guys with your trading regimen. So we're trying to do things to make you guys better traders. Find out how to do that at ProTraderStrategies.com or on our Facebook page. All right, if you can't take that, take it easy.